Welcome back. The Asian markets are slightly higher, but remember, yesterday was a bad day for emerging markets and SGX Nifty included. So we have to react to 2 days of global cues. Girish Pai is joining us now from Nirmal, head of research there. Girish, good morning. Thanks for joining us. I wanted your thoughts first on some of these auto names. They've had a big rally, especially, of course, names like Tata Motors, Ashok Leyland as well. In terms of risk reward, is it still good enough to take fresh investment calls here?
So I would be very selective on the auto names as we speak right now, because as you mentioned, the run-up has been very steep. So within the large cap universe, what we like right now is Hero MotoCorp. We don't think it's reflecting the kind of growth prospects that it has got ahead of it. So it's a stock we've liked quite a bit, but relative to the others, the way the others have run up, I think I think there's probably a 30% kind of an upside based on what my analysts expect. So the story behind it is about down trading in the two-wheeler market, driven by the increases in prices that have been coming through because of regulatory issues, insurance costs, all that kind of adding up to almost like 25-30% higher cost, leading to consumers moving to the 100 to 125 cc bracket of motorcycles, which I think is the strong point of Hero MotoCorp. So it's kind of being that 100 to 125 cc has been gaining share in the two-wheeler space, and within that, I think Hero MotoCorp is very well placed. So that I think is going to be a stock I would probably recommend in the large cap auto universe as we speak. I think as you were discussing, I think the scrappage policy is going to be something we are all going to be watching out for. What that means from a numbers perspective is still something we don't know, and when that is going to hit the market is something we still don't know. But that could potentially add to the earnings going forward, especially in names like Ashok Leyland.
Okay, all right, got that. In fact, tomorrow Maruti comes out with their numbers, and that's been another strong stock in the auto space. It's doubled from the lows in the month of March, so we'll keep tracking that one closely. Girish, good morning. What does one do with a stock like Reliance now? It has fallen quite a bit post its numbers. At any point, does it become a buy, or have you got a bit cautious here?
Sonia, we do not track Reliance, so I will not be able to give you any specific view on Reliance.
Okay, how about some of these cement names, the likes of Ultratech Cement, post the numbers? How does the cement pack look now?
Yeah, cement pack is very interesting to us. So obviously, our analyst believes that cement volume decline will be lower than what the street was anticipating. So when the year, as the year has kind of passed by, I think my sense is that the volume expectations have kind of have been improving. So somewhere at the beginning of the pandemic, the expectation was something like a 15% decline. Now it's probably like a negative 5% kind of decline is what I believe the street is probably looking at. And going forward into FY22, our analyst is expecting a double-digit growth. So a double-digit growth with prices kind of stabilizing, with costs broadly under control, would mean that you would have EBITDA per ton for a lot of cement companies in the 1,200, 1,300, 1,400 territory, which I think is good. While I would say a lot of these stocks have run up, we still think that Ultratech in the large cap space represents a fairly interesting bet. So volume growth was like 14% in the last quarter, which has been very strong versus a 6% that we're anticipating. So Ultratech is a stock we like in the large cap space. In the small cap space, we like stocks like Birla Corp, JK Cement. So those are the so cement as a space is something we like. Large cap, Ultratech, mid cap, Birla Corp, JK Cement. Those are the kind of stocks we like.
Okay, Girish, stay on. I want to ask you even about this two-day FII selling and what you make of it. But for a minute, we have to worry about L&T and its numbers, not worry about, perhaps gloat over. It was a better than expected operational performance. The EBITDA was higher than expected. EBITDA margins were higher than expected. And there was this big order book, massive, that the company reported. Joining us now is Renu Baid, the Vice President Research at IIFL Institutional Equities. Renu, good morning. Thank you very much. Well, what is the all-told reaction to the result? There was a bit of a red on the stock on Monday, so you can't even say it went into the results very strong. do you think it is in for a price upgrade?
Hi, morning, Lata. I would say, though optically the results look pretty strong, the silver lining essentially was the order inflow,
Yes.
which was evident from the orders that the company was announcing over the last 2 to 3 months. But operationally, if we see, we did not find the results very exciting enough because the beat at the EBITDA and at the PAT in the core business was essentially driven by the realty portfolio, wherein they monetized one of the commercial properties. And that was the key element for the beat. Otherwise, infra execution still remained a tad weaker than expectations. Core revenues were down about 2%. To that extent, I would say the result is mixed. Core execution has been soft. Working capital has been intact. So no significant improvement, no deterioration. Order inflow is definitely the silver lining where, given the improvement in the government spending, one should expect that 4Q probably will see ramp up in execution as well as fund flows from the customers start to kick in.
Okay, so you're saying that the results are not exciting and there's still some execution issues. Renu, good morning. But given that L&T has lagged its peers all of this year and the valuations seem inexpensive at 16 times FY22 and 13 times FY23, do you think there is more scope for an upside in the near term, and what would your target price be?
Yeah, surely I think the valuations are pretty attractive. Though this year they have lagged versus some of the mid-cap peers because of multiplicity of size and complexities. But given strong backlog of more than 3.3 lakh crores, we clearly expect the execution in the next 12-18 months will bounce back strongly. So to that extent, if you look at the next 4-6 quarters, execution margins should have positive tailwinds. So we maintain buy on the stock. We have a target price of 1635.
Okay.
And this remains among the preferred pick in the large cap space.
Okay, so it's a buy-in, regardless, though you think that the execution was unexciting in the third quarter. Thank you very much, Renu Bed. Girish, similar question to you. It's not one of those huge performed stocks, and a big order book would mean that the future could look much brighter. Any thoughts, L&T?
Yeah, so I think the numbers were good. I think in the infra space, we would rather look at some of the other stocks there. So we prefer stocks which have got next to no debt on their books, or probably got very good working capital. So a couple of stocks we like in the infra space. These are small cap, mid cap. Our PNC Infra and KNR both have zero debt on their books. And as you mentioned, order inflow has been extremely strong. For instance, PNC Infra has actually seen almost like 10,000 crores of order inflow on top of a 6,000 crore order book that they had at the beginning of the year. So, and this is a guidance they'd given that they would do 10,000 crores of order inflow in a year's time, that they've accomplished in 9 months. And that is almost like 3.5 times their FY20 sales. So order inflow has been very strong in the infra space, especially on the road side. And so PNC Infra is one stock we like. The other stock we kind of want to look at is Solar Industries. Again, it's a mid cap, which is a play on industrial explosives. So it is a play on the infra space because almost like 25-30% of it goes into housing and infra area. And also, coal. It's used in coal mining, Coal India, and some of the other players in the coal mining space use up that. And the big uptick in global metals and mining, I think, is going to be could be the other. It could be a derivative. It could be beneficiary of that in one sense. So I would say PNC Infra, KNR, and Solar Industries to me look a better bet, so to speak, at this point in time.
Okay, Girish, you track IT, of course, very closely. We had Microsoft's numbers and they look good, and there's been, of course, some kind of impact perhaps even Indian IT could feel. But what would be your top picks in the IT pack now?
Yeah, so the Microsoft's numbers have been fairly strong. So especially Azure, from whatever I gather, is up on a YOY basis by above 50% is what I understand. So there's actually stronger in the December quarter versus the September quarter. Apparently the September quarter growth was about 48%. So versus an expectation of 43% growth, they've delivered 50% growth in Azure. So obviously this is all built into the stock price for a lot of the tier one stocks as we speak. They've all run up very strongly. Obviously the results have been very strong, and they've surprised both on the top line and more so on the margin front. People are expecting some kind of margin compression because of salary-related issues, but that has not kind of come through. I think better utilization, higher offshoring has all ensured better margins. So the stocks having run up, the large cap stock I like right now is HCL Tech. I think the market is mispricing the company. I don't think the market is giving the company adequate multiples on the ITAS business, which I think is a fairly healthy business with similar kind of growth patterns and probably a similar kind of margins as some of the tier one IT companies, maybe a little less on the margin front. I think the street is giving a very low valuation to the products business, maybe a negative valuation to the products business, which I disagree with. I think while a lot of the portfolio is mature and slow growing, I think there is definitely some component of that portfolio which is not as mature and probably growing very fast, which are very relevant as we speak right now. And in the whole digital transformation space, be it connect with e-commerce, cybersecurity, digital marketing, or collaboration, I think these are growing. These are growing very, very strongly. So we've seen almost like a 13% growth in the products business on a like-to-like basis for the first half of for the 6 months ending December. I think this particular piece of HCL Tech has been mispriced, needs to be given a better price to sales multiple or price to earnings multiple. Okay. So I think taking that into account, I would say HCL Tech is my top bet in the IT services side.
All right, Girish, we'll leave it at that. Thanks a lot for joining us. Have a great day. We will touch base with you again. That's on the IT space. But the other big stock that moved on Monday was Aurobindo Pharma. It was up 10%. Now, the government has approved the application